So in today's video, I'm going to be showing you how you can find 100% APR DeFi positions using free tools like DeFi Llama as well as Metrix Finance. Now we're going to be diving deep into how you can get down into the filters, how you can find the best positions, how you can actually deploy your capital into these positions, and kind of go through the process yourself. So with that being said, if at any point in time you guys enjoy today's video, make sure to drop a like, subscribe, notifications turned on, and of course, let us know what you guys want to see next on the channel, because that's where we get these video ideas from, directly from you guys. So I want to hear from you guys. What types of videos do you want to see? What do you need help with? We're happy to help. Now, if we take a look over here at DeFi Llama, there's this yield section. So DeFi Llama is an all-in-one tool for finding positions, but also everything else DeFi related. Now, the thing is, DeFi Llama lacks structure when it comes to niches like concentrated liquidity, where you can adjust your range and earn super high APRs. So it does give you a broad and general overview of things there. And then we could take that information into Metrix Finance for free and simulate potential results. Anyways, once I'm on this yields page on DeFi Llama, what I like to do is search for assets that I believe in. So that's going to be some stuff including Ethereum. Now, I'm not going to type in Ethereum simply due to the fact that if I type in Ethereum, I'm going to get tens of thousands of opportunities. There's already 14,000 pools being shown right now. And as you can see, a lot of these are Ethereum. The reason why is because regardless of if you like it or not, Ethereum is the backbone of DeFi, and it still is, right? If we look at the chains, Ethereum has a TVL of $65 billion. Solana has a TVL of $11 billion. Yes, Solana is growing at a faster pace than Ethereum. Yes, Solana has more addresses than Ethereum. Yes, Solana has more volume than Ethereum, but ultimately Ethereum is where the liquidity is at. And when large institutions onboard into this space, they're going to onboard onto Ethereum. They are not going to onboard into Solana. The reason why is because that's where the money is, that's what they trust, and that's what's decentralized. So while they might have fewer active users, these users are worth more because they transact significantly more and they provide significantly more liquidity. They have a longer term approach than the people over on the Solana network. So some stuff that I might enter is something like Aave, because I want to look for pools that include Aave token. I could also enter, say, Aether. That's one of the tokens I also like. I can also enter, say, Render. It's another token that I like. And just generally, we want to find the assets regardless of how you find them. I typically find them on CoinGecko and just browsing X and looking at the news and stuff like that. That's how I find my assets. I do further research into them. I'm like, oh, this seems like a good asset to include in the liquidity pool. I dive into it, right? The other thing you want to determine is, what are you going to pair these assets with? What are we pairing Aave and Aether with and Render with, right? Well, in this instance, we're probably pairing Render with Sol, Aave with Ethereum, and Aether with Ethereum. So we need to see a correlation chart. So DeFi Llama has this tool down here. It's called correlation. If you go over here and you just simply type in Ethereum, Sol, which are the two assets that we're pairing with, and then also type in your Aether, type in your Render, and type in your Aave, basically the assets that you selected, you can see everything broken down on a correlation chart. So for some reason, it was glitching out and not letting us actually see the correlation for Aave and stuff like that. It usually doesn't happen. A lot of the times, you're just going to see a chart like this. Like if I were to type in BTC and Ethereum, you'll see, oh, over the past year, they have a 57% correlation. Over the past month, about a 14% correlation. In the past week, about a 38% correlation. So you can really zone in on that. And ultimately, that means if one's rising, say 10%, perhaps the other one's rising 3.8%. It's kind of what that's telling you. And that's on average, of course, not on a daily basis. If we were to dive into yield rankings over here, this is a list of all the pools. There are 62 different pools right here. That's a lot to look through, but it's not that many in perspective. What I like to do is start by filtering the APY. And I want to look at an APY of at least 30%. Now, guys, I can zone in on the APY. Perhaps if something is doing, say, 30%, like this one right over here on Gamma, or if something is doing, say, 57%, I can go in with a tighter range a lot of the times and ultimately get a higher APR. So that's why I set it at 30% as opposed to looking at stuff that's like above 50, 60%, right? Because ultimately my target is something like 50, 60% on some of these pairs, and I want to make sure that I can get above that. And if I go with low of 30%, it's going to show me those opportunities. TVL, I usually like to set this at $1 million just because I don't want to be exit liquidity. I want to actually be in a pool that other people are also investing into. Simple as that. And as you can see, we have our liquidity pools right here. We have Aave to Ethereum on Uniswap v3. We have Uni to Aave on Uniswap v3. We have Ethereum to Aave, Uniswap v3, and another Ethereum to Aave on Uniswap v3. This time, these ones are across Ethereum, Arbitrum, and Polygon networks. We have Sol to Render. This one has about a 105% APY. It's pretty good. It's over on Radium. And then this one over here, Sol Render's futures, and about 117% APY over on Orca. Now, here's the thing. I want to actually zone into this because as you can see, if we hover over it, it says it's just calculating based on a plus 30, minus 30% range, and it's using the 7-day of trading fees. So it's a decent calculation, but remember, if we dive in with the super broad range, we're gonna get a lot less. If we dive in the super narrow range, we're gonna get a lot more. So that's where we take this information and we pull it into Metrix Finance. So what I'll do is I'll click on the pool right here, just like that, and that's gonna pull this liquidity pool up. We're gonna see a lot of information about this liquidity pool on DeFi Llama off the bat. Sometimes we'll see these risk ratings from Exponential Finance, which is pretty cool, and it just gives us a good idea on like what type of risk we are actually taking by investing in this pool. We could also see the moving average of the supply APY, so seeing how that APY changes over time. Recently, it is up. The reason why it's up is because, of course, there's been more transaction volume in DeFi, the market has been growing, and there's been more liquidity coming in the market. You can also see the same exact thing right over here. So now I'm gonna head over to Metrix Finance. I'm gonna go to this simulate page. Now remember, on Metrix Finance, we can discover all these liquidity pools as well. And I'm currently using the free version of Metrix Finance, so we're not gonna be able to filter or select multiple exchanges at once. But what we can do is go into simulate and actually pull up these liquidity pools and get a good feel for what we could actually do when it comes towards our potential returns. So again, since this is on the Ethereum network, I'm just going to select Uniswap on the Ethereum network, and I'm going to start to select Ethereum and Aave. Within a couple seconds, that's going to pop up with the fee tier options, and we'll be able to select the 0.3% fee tier right over here. It's also highlighting that that's where the majority of the liquidity is. You can see that there are fee tiers active for the other ones, but 100% of the liquidity is in the 0.3% fee tier. So now we'll hit simulate. It's going to take a sec. We're going to pull up the Ethereum to Aave liquidity pool, and just like that, you can see a bunch of data about this liquidity pool, and we can actually simulate the return. And you'll already notice off the bat, we're showcasing a 114% APR as opposed to a 87% APR. And let's zone into that, right? Because we do have a plus 25%, minus 25% range. Additionally, we are taking into account more data. We're going to see what type of return we can realistically get. But this is where we would go and we would adjust our range. Our range is essentially where our liquidity is being provided at. So if we were to park, say, $1,000 right here, and say between these green lines right here, there's like 10 price points. That's about $100 per price point. Now, obviously, there's more price points than just 10 in this range, but that was just an example. And yeah, ultimately, we want to dive into this and see what range we could do. I usually like to set the 30-day high, the 30-day low. If you guys want me to make a full video on how to select ranges using our range framework at Build Wealth, let me know down below in the comments. I'm happy to do that for you guys. And at any point in time, if you guys need some support with your DeFi portfolio, you want to personally work with me and have me play a role in actually helping you build out your portfolio and strategically deploy your capital, let me know as well. There's a link right below this video down below in the description, and you could watch this quick little video that I have on the page. From there, if you like what you see, apply to work with me, and you'll hop on the phone with me or one of my team members. We'll see if it's a good fit, basically. Anyways, to dive back into ranges, as I mentioned, 30-day high, 30-day low. But with that being said, we want to follow the trend as well. And if the trend is going down, ultimately, we don't want to go out of range super quickly. So I'm going to adjust this top price around 11.5. That cuts this little peak right here, and it gives me some more leniency to adjust this min price. And I could say, okay, I want to adjust this min price to, let's just say over there, 7.8. The reason why is because I want to be able to capture this recent jump as well as any future trend that we see if Aave starts to outperform Ethereum. So we'll do 7.8 to 11.5, just like that. We'll set our deposit amount. I highly recommend if you are selecting the Ethereum network, you do at least $15,000 in positions, and that's because there are high gas fees on the Ethereum network right now. And then from there, you'll be able to see potential returns, and we can actually adjust this calculation range to use 7 days as well. That's the amount of days that DeFi Llama uses. Now you'll notice that we're doing a 251% APR right here. That's a pretty damn good APR. But what you have to take into account is there's like a third of the liquidity on the current price points than there is right over here. And if the price were to revert right back to where there is more liquidity, we go from doing this 200% APR or so all the way to roughly a 95% APR. The reason why this liquidity has not moved yet is because number one, people on the Ethereum network do not move their liquidity quickly. But number two, you'll notice that in the past 7 days, there was volatility. Like right over here, we instantly jumped down. So these people have just not had the chance to move their liquidity in the last couple days, or perhaps they think it's going to retrace. But if we hop into this pool, we can expect to get a 95% APR. And then with that being said, at the time like of entering, we can expect to get roughly a 251% APR because the volume is so high. So that's a very, very good pool to deploy into. And it's also because there's high volume of, $34 million in a day. And that's kind of averaged out to now 16 million, another, 14 million over here or so per day. So do keep that in mind. And then from there, if we like what we see on this position, we can hit create. It's going to take us over to Uniswap to actually create the position itself. So we just type in Ethereum and Aave, right? We'd select our 0.3% fee tier. We'd set our price range. We could just copy and paste what Metrix Finance says. So 7.8 to 11.5. It's going to automatically adjust this just by a little bit. And that's because it has to find the closest price point, or otherwise known as tick. And then from there, we hit continue, and then we can type in our deposit amounts. Now, if we type in one, it's going to automatically pre-fill the other. So what I recommend you do is you actually grab the number from Metrix Finance, paste that in here, and it's going to tell you exactly how much you need of the other one. And then from there, you can deposit your $15,000 or so of capital into this liquidity pool. Simple as that. Again, this entire tutorial using DeFi Llama. DeFi Llama is completely free. Using Metrix Finance, this is semi-free, right? But we were using the free version today to kind of map out the process of finding different positions using DeFi Llama and then going over to Metrix Finance, simulating those positions. As I mentioned, you can also go over to Metrix Finance to find these positions. So for example, if we wanted to look at Uniswap V3 positions on the Ethereum network, or hey, even Orca on the Solana network, we just select that. And then from there, all we have to do is start to browse through these different positions. Now there's 329 different pools. You can favorite these pools as you wish. You will have to kind of sign in to create an account so it can save to your account. But on top of that, the other thing that I wanted to go ahead and mention is we can't filter with Metrix Free, unfortunately. That's just one of the convenient features that saves you like hours and hours per day. But ultimately, we can quickly scroll through some of these. It's not that hard to look through a couple hundred pools if you know what assets you're looking for. And we can also sort. So if we want to look at highest APR first, like AI16Z to Fartcoin, right, is doing 2,900% APR. Now, I'm personally not going to deploy into that. You'll notice there's a lot of meme coins over here. So we could just kind of sort by that and then just go to the next couple pages and start from there. It's an easy way of just finding the different positions. Again, this is going to be specifically concentrated liquidity positions. So you are going to get more accurate data on Metrix Finance from what I found. But ultimately, what you have to take into account is if you do want to be able to filter, if you want to be able to see correlation on Metrix Finance, if you want to be able to add positions to build after simulating them, all that stuff, you are going to have the pro version, which there's like a free 5-day trial or so. I hope you guys did enjoy today's video. Once again, if you guys need some support with your DeFi portfolio, we're here to help. We're happy to help. Just let us know. If not, no pressure. Enjoy the free content on YouTube. See you guys next one. Peace out.